Hi and welcome to Daily Recap. So this is day 77 of my daily recap, and today is August 13, 2024, and it's Tuesday. So overall, I got today is -1 hour today in both cumulative of both gold, EU and GU. So in EU, I actually took a break-even trade, but yeah, you can see this one day result is break-even, but still I incurred a loss. Okay, I'll show you why in a few seconds. So let's jump into the daily chart and start from the pre-session analysis. The daily is actually swing structure is bearish, so this is a strong swing high, weak swing low. Price liquidated the strong swing high and it's pushing down. So price can come down to fill this imbalance and also mitigate this daily supply, I mean the daily demand. That is the if you see it from bearish lens. If you see it from a bullish lens, then you can see it as the internal order flow is bullish and price has already swept this market imbalance and it can move up. And also if you compare from year to year, the price has already reached the discount prices of this internal range and price has swept this imbalance and can go up and to mitigate this daily supply. So from both the bearish lens as well as the bullish lens, the daily bias is very much neutral. So what I can do is I can jump into the 4-hour time frame and then I can look for much more information. So this is 4-hour time frame. The 4-hour swing structure is bullish and the internal structure is not bearish because price just liquidated the internal low. But I have marked the small internal structure. The small internal structure is bearish. And here you can see a ton of low resistance liquidity and a good POI here, and which has an inducement also. So obviously what your mind can say, obviously your mind will say shorts because POI, there is a POI, there is this inducement. Price can take this inducement, use this buy side liquidity to take sell side liquidity. Remember, price will move from liquidity pool to liquidity pool. So if it takes the buy side liquidity, it can take the sell side liquidity. It's very much obvious, right? And also the small internal structure is bearish. And this is 4-hour time frame, not an H1 time frame. So this small internal structure in H1 is actually the internal structure. So and in Kempufin, this would be a swing structure. So it's very much easy to judge whether the price is going to come down. It's the bias is very simple. Unlike in daily, the bias is very simple. The only caveat is that there is a strong low. I mean the strong internal low. Well, this is just an imaginary line, and this could also be taken out if there is liquidity, if the big financial institutions find a ton of liquidity below here. Very simple. So it's a simple bias, and here you can see the H1. As I already told you, that this is the internal structure which we saw as a small internal structure in the 4-hour time frame. So in H1, the swing structure is bullish, and the internal structure is actually bearish. So this is the current internal structure that we are dealing with, and this week internal low is also previous week's low. So which gives me a ton of confidence to go for shorts today, and price need not tap into this 4-hour supply because there is one more H1 supply here within this internal structure, and it has also got an inducement here. But the only caveat is this POI has already been mitigated and it has not shown enough reaction, and the price has made another boss, I mean another fractal boss here. So which means what it's telling is the price is able to fill the sell orders here, but those sell orders are not creating enough uh, pace in the market, which means after filling these sell orders, we can what we expect is price to use those sell orders and then push down. But they are not pushing down because for each sell there is opposite buys. So which means that the demand is pushing the price up and they have more than the supply. So that's the only caveat there. But during the session, if I see H1 change, H1 shock bearish, then that would give me an enough confidence that okay, the supply is stepped in, then I can look for that fresh POI and then I can take trades. So it's simple. The bias is set, and all I need to look for is the supply is in control or not. And yeah, here you go. During the Frankfurt Open, during the London Open, I just got this bearish chalk, indicating that yes, supply is in control. So this would be my fresh POI. So I can wait for the price to come here and wait for the M15 LC1 or something. But very high probability trade because of all these low resistance security previous, I mean this internal week low and this previous week's low. So price has the potential to come all the way down. But for me, fixed 2.6 would be more than sufficient. Why 2.6? Actually, my target would be 2.5. To factor in the commissions, I'm just targeting 2.6. So it's very simple trade. So what I did is like instead of M15, I decided to jump into H1 risk entry because I don't want to miss this beautiful opportunity. So this is phase C, and yeah, it's a kind of medium probability trade because price has already reached the discount prices. So trading is riskier. So, but apart from that, everything is satisfied. So the high time frame narrative is supporting this medium time frame idea, and the this POI has 4 out of 8 criteria met, and it has also an S&P divergence, a bearish S&P divergence, and it is in line with the medium time frame order flow. So what are the criteria? So it must have swept liquidity. Yes, it has displacement. That's made a 15-day order flow. I'm talking about this POI formed during the kill zones, and it must have flipped an order zone. I mean, it must have flipped an order flow. So everything is perfect about this POI. So what would be the entry method that you will choose? I just left this blank because, okay, I just wanted you to guess. Like my intuition, initially suggested me to go with M15 LC1, but later seeing the displacement, I decided to go with H1 risk entry. So this was my risk entry that I placed here. Stop loss above. Because of that risk entry, my stop loss became wider. I think it was around 9 pips or something, but yeah, it's manageable, right? So considering the ton of liquidity here in the previous week's low, yeah, it's worth it. It's worth to take the risk. After careful consideration, I have decided to trade using H1 risk entry and place a sell limit order. I have a strong intuition that this trade would play out. Internally, I'm trying to suppress that expectation as much as expectation as each moment is unique in the market. Yeah, you all get the urge that yes, I'm going to win and I'm going to win. But thing is, yeah, it is low resistance liquidity. There is previous week's low. Everything is same. But this setup would have played few days back, but it is not guaranteed that the same setup would play out today also because for the same setup to play out today, you need the same set of market players with the same set of psychology, and there are millions of players playing this game. So it's it is an impossible event for the price to play out the same way that it did few weeks or few months back. And yeah, I was tagged in. So once the price took out this low, I reduced my reduced my stops to this level. So this was the initial M15 LC1 line. So you can see the price hasn't took out the didn't give an LC1 entry, and the price started to move down. So I was confident in this stage. At this stage, because of this strong reaction, I was in a bit of doubt. So I just brought my trade to break even because I don't know because of this strong reaction, price could move up and take out my stops. So for the safety reasons, I brought my in stops to break even. And one more thing is that at 13:30 there was a red folder news. I mean three red folder news. So that would cause a major disruption in this euro chart. So price could either push down tremendously or it could push up rapidly. So what I did is so that was the second reason why I pushed my stops to break even, and I set my alarm to 13:25. So at 13:25, I'll take if my take profit was not hit, I'll just remove my profits. I mean, I'll just remove my take profit level. If the price wants to go in my direction, then it can go whatever distance it wants, and after the news window, I can cancel the trade. So that would give me more than 2.5. If not, I would be break even. So very simple concept. So uh, with this rejection, you need to quote some liquidity here, and then price started to push up. So at this point, I definitely know that I'll be going to stop out at break even, but I still had that hope of price can come down with the news and take out the low resistance liquidity. But the thing here is the price always targets the strong highs or strong lows during news times. So this is a strong low. So I had a strong tendency that okay, price can take out this strong low. But anyway, I was risk free at that time, and also there was this bullish S&P divergence here with DXY. So high chance that the price can push up and take out my initial stops, but it is what it is. I just made my stops break even, so no issues for me. That's what I thought initially. Exactly at 13:30, price pushed up as expected and took out my stops. Because of the high volatility, my stops didn't go out at plus 0 hour. It went out at minus zero point 0.8 hour, which is roughly minus 1 hour, which is a slippage issue. during news, and I got stopped out for I lost more money than I intended. So this is a lesson learned. This is not, something to be worried about. So this is a lesson learned for myself that news trading is dangerous, especially when the price is around your stop loss, because news can, suppose if you want to risk -1%, I mean 1% during news, if price goes against your trade idea, then it may be -2, -3, depending upon the slippage issue. For me, it was -1. I kept at 0 or it was -1 or. Yeah, it is what it is. So lesson learned. It's not actually lost. I managed my trade perfectly, but now I understood that okay, use is also dangerous. So in future, I adjust my trade management plan according to this situation. And yeah, price went to this 4-hour supply, and price also took out this strong internal high. So the bad news is I got stopped out, and the good news is price is now in the phase A, which is the highest probability phase. So I can look for longs and take longs here, which obviously you know has higher probability of success. So I was off the desk with -1 hour. So that's it for today. If I jump, okay, let's start the GU. So in GU, I didn't get any trades today. Okay, let's jump into the market and see what the chart offer for me. So the GU is very simple. The string structure is bearish, I mean the string structure was bullish. This is the weak swing low, I mean strong swing low. The swing high is not yet found, but I can take this as weak swing high because it has sufficient pullback. But the only thing I was expecting is price to take out make a internal break of structure on the downside, so which would give me an indication that okay, once that a swing, like for me a swing structure must have an internal structure. Since there is no internal structure here, so I was not confident in taking this as the weak internal high, but I'm assuming that this would be the weak internal high. Sorry, I was not confident in setting this as strong swing high. Sorry, sorry, weak swing high, but I just set this as weak internal high. Okay, price came down, made an internal pullback. So with this low resistance, with a series of supply chain respecting each other, so this actually forms a low resistance liquidity, and price tapped into this area of demand and then made chalk up, made chalk bullish. So what will your intuition tell immediately? Low resistance liquidity on the upside, price tapped into the demand and then chalk bullish. So what will you know? Yes, you obviously know that the price is going to go up, taking out all the low resistance liquidity on the upside, and obviously taking the weak internal high on the upside. So it's very simple analysis. So this was the POI that made the chop. So I expected this. Yeah, I actually it got mitigated a bit, but I expected a deeper mitigation and then the price to push up. So so this is 4-hour chart. The swing structure is bullish, and the internal structure is actually bearish. This is the current internal range that I'm dealing with. So if I jump into the internal structure of the 4-hour time frame, so this is the last POI. So where the 4-hour, oh sorry, this is the last supply of the 4-hour. If this supply fails, only lower resistance liquidity is here. So easily the price could take out this strong internal high, and then it can boss bullish and then continue this boss bullish to take out the weak swing high. And remember, there is also a low resistance liquidity is built up on the downside, so price can come down to tap into this 4-hour demand and then it can push up. But the question here is there is low resistance liquidity on both the sides, here as well as here. Which one would the price take? So, and one more thing to consider is this POI. There is a ton of sell orders here, but those sell orders were just filled and then they were not able to push down, which means, as I told in the EU, the sell orders were filled, but those sell orders are not able to create an uh, imbalance in the market because for each sell order there is a opposing buy order. That means the demand is more than the supply. So that's why this POI is not able to, these sell orders is not able to push the market down. So this POI will be definitely failed. So once price invalidates this POI, all it can say is low resistance liquidity. So the price will just push up just like that. So price will not come down to take out this low resistance liquidity. But I just believe that I just want to confirm this with H1 because in 4-hour it's neutral. If the price goes above, then we are sure that the prices will stick to this bullish order flow till it take out this strong internal high, and it will not consider this low resistance liquidity below. If the price consider this low resistance liquidity below, then the price can tap into this demand, and then it can make another small bullish legs, and then it can take out this strong internal high. Anyway, um, let's jump into the H1 and see what the H1 has to offer for me. So this is the swing structure of the H1. It's a strong swing high, weak swing low. Internal structure is bearish. Sorry, the internal structure is bullish. This is the internal structure that I'm currently dealing with. Strong internal low, weak internal high, and price almost took the 4-hour supply. I mean, invalidated the 4-hour supply. So this is the POI that I was expecting the price to come and mitigate and then go up. I mean, go up, but it's not always, it will happen. But sometimes it may happen because price actually liquidated the weak internal high, which means that price could come down to take out all these low resistance liquidity and take both occasion lows, tap into this POI and then go up, or price can just push up, take out these low resistance liquidity and then start pushing up to take out the strong swing high. So that would be known during the development of the session. Yeah, price actually invalidated the POI and pushed straight up. So pushed straight up. So what I was expecting is, I can't take trades here because I can't take trades directly from, shorts here because there is no POI as I showed you. There is no POI here. I could have taken trades if this based on this liquidity has been traded, and I could look for any M15 confirmation entry and then take trade. But that's not a part of my game plan, so I just avoided that. Yeah, actually, it kicked in my mind to take the trade, but I didn't take any trades based on that. So all I waited is H1 to chalk bearish, fresh POI. I can take M15 LC1. That was going in my mind. I was patient. As I already told you, price need not respect this low resistance liquidity. Once this low resistance liquidity has been taken, it will just continue and then push this bullish order flow to take out this strong swing high. So this would be my POI for tomorrow because this is already end of the session, and this would be my POI to trade for tomorrow if the price doesn't take out the strong swing high. So if the price comes here and I can look to play that A2 longs, but I must also keep in mind that the price can come down to take out this low resistance liquidity to tap into this unmitigated demand before pushing up to take out the strong swing high. So it is very less likely to happen, but there is a possibility that it can happen. But for now, I didn't get any trades because price didn't tap into any of the valid supply zones, valid demand zones for me to take longs. And even if I consider this as the demand zone, it has low resistance liquidity just below it, so I was not interested in that. So that's it for today. And also there is news today. So price just it was behaving in a very haphazard manner. So I just don't want to risk my capital this way. Okay, guys. If I jump into XAU, as I already told you, I didn't get any trades. Yeah, I didn't get any trades. So let's see. Let's take a look at XAU versus USD. So the swing structure of the gold is bullish, and this is the strong swing low, weak swing high, and price mitigated this daily demand. The internal structure is still bullish. Price mitigated this daily demand, and then it started to push up. It created a kind of equal highs. So I was expecting this price to take out this equal highs as well as take out the daily peak swing high. So it's very obvious that the price is going to go up. So the bias is very clear from the daily. Though there are imbalances down there, those will be filled later on once the price takes out that equal highs above and the weak swing high. So this is the 4-hour chart. So the 4 hours, the swing structure is bullish and the weak swing high, strong swing low. The internal structure is also bullish, kind of low resistance liquidity here. But for currently, there is no demand from which I can expect the price to, mitigate that one and then push up to take out the 4-hour swing high. So the only demand was here. So what I can actually do is jump into the H1 and look for some sweep zones. Or if there is a chalk bullish on the H1, then I can look for that freshly formed POI and then I can take longs because price is about to take out the weak swing high. So this was this is the zoomed in version of the 4-hour time frame. The only demand available was here, but and also you can see that there is evening star formation from this POI. So I can say that price is going to come down today, at least to tap into this 4-hour demand, and then price can push up. So it can happen, or the H1 can just, form a sweep zone, push up, uh, chalk bullish, freshly form POI, and then it can go longs. So H1 is what ultimately that I'm going to follow. But for us, it's just a directional bias. That's it. So this was the POI that I found in H1. So price can respect this POI even though it is low probability. It does not have any inducement. It didn't sweep any liquidity, but still it is a area of value where the price has pushed up strongly, creating imbalance in the market, and it is also formed during the session. So I could consider this as valid POI, but it is very low probability because price is about to take out these weak swing high. So it can just mitigate any of the valid demand and then it can push up. So I won't take trades directly from here. I'll be looking for H1 to chalk bullish before taking the trades. So since it is low probability, I'm not jumping into the M15 LC2A. I just want to confirm that this POI holds with chalk bullish and then I'll take trade from the fresh from POI. Either it is risk entry or M15 LC1. So there is no, I didn't update the session whole time because I set my trigger here exactly at top of this POI, expecting the price to mitigate this POI and then push up. But yeah, actually I saw this price to push up and make a chalk bullish, but I saw this as a fake break liquidation. So if this was a fake break, so obviously this could be the sell side liquidity that could have been generated for the price to mitigate here because there was no lead here. So the only liquidity that the price could engineer would be during the pullback, and I thought this would be that liquidity. But this bullish structure held itself and then the price started to push up. So this liquidity was not taken. Actually, this was the actual move and the price started to push up. And during news, it tapped into this demand and then it pushed up. So I didn't check the gold chart because I was busy looking at the EU and the EU chart. And I don't have three monitors to look all the three pairs simultaneously, right? So I was waiting since I didn't get any trigger from gold, so I didn't notice it all day. And I was busy with my 9 to 5, so I whenever I got time, I checked the gold. I mean, I checked EU, but I didn't check gold. So that's why I didn't notice this bullish order flow kicking in. So anyway, my analysis was, it didn't take out the strong, I mean, the weak swing high, but maybe it can take out, the during the New York lull or during next day. Analysis was correct, but I did not get any trading opportunity. And again, there will be always another trading opportunity. So for now, yeah, thank you guys. Yeah, one more thing is that even if I use this as my demand zone, I won't get any trading opportunity because this was mitigated during the news. And in news, only single candle will mitigate, and that candle will be very large, and my stop loss will be very large, and I won't get any trades to do. So anyway, in whichever angle you see, there is no trades to do. Okay, guys. That's the overall analysis. So to summarize, EU I was break even, but I was -1 hour because of slippage, and GU no trades, and XAU also there is no trades. EU there was I mean GU there was no trades because price started to move up, taking out all the low resistance liquidity above, and there was no POI from which I could enter longs. And XAU there was no trades because the price didn't mitigate my intended POI, and it started to move up, and I was not able to get trading opportunity with that bullish order flow because the price mitigated that bullish POI during the news, and during news I won't get any opportunities. So yeah, that's it guys for today. The key here is to stay consistent with this strategy for a long period of time, hopefully. Thank you guys. Cheers. Bye.